Welcome, folks, to Wednesday, the 19th of January. Okay, just put my phone on silent there. Right, my main focus is the stock markets at the moment because obviously they're moving quite significantly. We've got, this is the hourly chart now. Just going to try and make sure all the moving averages are in there. Let me see. Yeah. We've got the hourly chart here showing, the 4-hour chart showing us breaking the neckline to the head and shoulders. Now, these lines here are actually my sell orders. So you can see I started getting into some short positions as the market broke. Now, we're actually returning to those levels. So I'm hoping that this will act as a resistance level and the market will turn lower. Let's have a look at the daily chart. You can see that the blue line there, I probably should zoom in here actually. The blue line is my 100-day moving average. Now that came in bang on the neckline, so we've broken that, so that's negative. We broke the neckline to the head and shoulders, so that's negative. Let me just try and pull that down. There we go, that's a little bit more, a bit clearer. Zoom right in there. Okay, so the neckline to the head and shoulders was broken, as you saw on the hourly chart. I can probably just put that in here as well. Why don't I, just to make it clear. That's the first neck, and that's the second, that's the left side of the neck, that's the right side of the neck. Bang, broken yesterday. Daily closed below, so that's important. Break of the 100-day moving average today, although we broke it yesterday, we closed above it. Now we appear to be trading below the 100-day moving average. So for me, this is quite an increasingly negative picture for the Emini S&P, or the S&P cash as I'm looking at right now. This is the 4-hour chart, so just zooming in on that pattern nicely there. Obviously on the 4-hour chart we're trading below the 200, the 100 and the 50 period moving averages, so that's quite negative. Got a little bit oversold in the 4-hour chart, but that's not something that would concern me holding a short position, certainly not. On the weekly chart we've got a divergence here. Look, this is worth looking at. So we've got quite a clear divergence. As you can see, the second peak in the slow stochastic is well below this peak there, and if I'm not mistaken, we've got the second peak here for the actual price is well above this peak here. Do you see what I'm saying? So let me just really try and clarify what I'm doing here. I know some of you do look for divergences, so you will understand what I'm saying. There we go. I should probably just move that way, and then move it. Right, now then, so if I put a trend line on here, you can see that we did increase at this period to a new all-time high. But when you look at the slow stochastic, which is my favorite indicator, we've actually got a decline. So that is an extremely clear case of negative divergence on the weekly chart for the Emini S&P. Now that's not something that I would base a trade on particularly. I certainly wouldn't. It doesn't give you any timing help, for example, but it does indicate that they're still quite negative. It shows the market is running out of steam. You definitely shouldn't be seeing that in a bull trend. So this also gives me some extra confidence in a short position with the bearish engulfing candle that we saw on the weekly chart. As you know, I've been watching that for a while and looking for a pattern or a signal for me to start getting into a short position, and I do believe that we have come to that point. So as long as we stay below sort of 4600 for the cash index, it looks like we will be heading lower. Nasdaq, come on, is most definitely in that short-term bear trend. I've talked about us probably developing into a short-term bear trend for the Nasdaq. Well, this is happening because you can see lower highs and lower lows. We've got the 200-day moving average there for the Nasdaq cash. We've got to break below that, so we've got to get through probably sort of 15,200, 15,150, and that could see the Nasdaq sink further. As you can tell, I've got quite a negative bias. Look at this. That's maybe it's not a divergence, but that sure does show weakness on the weekly chart for the Nasdaq. We're trading below the 100-day moving average on the Nasdaq. Testing the 200-day moving average, break below the 200, as I've just said, would be quite negative. And on the 4-hour chart, we're certainly trading below all the moving averages as well. So I think this paints a pretty negative picture. Let me have a look at the Germany 40 market. This has actually been holding up quite well, but I'm not sure how long it will hold up for. The support level yesterday was absolutely spot on. Very happy with that. Worked perfectly. I have to wonder whether that double top will start to kick in now. Look, the moving averages have been converging because we've been in a sideways trend for so long. 100-day moving average, 200-day moving average, the blue and the red line are very close together, certainly acting as support, but I got a feeling that won't happen for too much longer. That support level that held so well yesterday, I wonder if that will give way today, dragged down by the US markets. We'll have to see. Okay, that's it. Yeah, I just think there's a negative bias for the stock markets, and I have a little short position on the Forex markets. As you know, they're trading sideways. I'm not going to bother to show you again how they're trading sideways. I broke them down for you yesterday. The euro plunged a lot further than I expected, so I have to hold my hands up in the air and admit I got that completely wrong. Yes, I did lose money on my long position. Yeah, I don't know what to make of this. What is that pattern? Really don't know what to make of it. So there you go. Maybe it's a bear flag. Maybe it's just a very clear bear flag. Maybe the market's been trending. Oops, what am I doing here? Maybe the market's been trending down, and that's a very large bear flag, an unusually large bear flag, and the market will break. But I'm not going to speculate. I just don't know right now. So for me, it's a case of just scalping the levels in the Forex markets if you want to be active in that. All right, hope that helps. You've got all the reports. You've got all the scalping levels in the Forex markets and gold, and obviously my negative bias in the stock markets. Good luck today. We'll chat again tomorrow.